Hey Crypto Wizards, Sean here, and I want to give you my top 3 rules that I try to stick by to keep me profitable in the cryptocurrency trading realm. So let's get into it. Rule number 1, do what works. I'm a big believer that if you want to go from here to here, emulate the people here who is successful at trading. In other words, the people that go to trading desks and are profitable day in and day out, every single day they're making money like you go to work and you earn money. So what do they do and what do they learn that works? Let's say you go and start at a prop firm. What'll happen is they'll put you on a 2-week training course, something like that, and a lot of the new traders aren't even allowed to use charts until they become profitable in trading. Well, you might say, well, if they're not using charts, what are they using? Well, they use something called the depth of market. Now, I'm not talking about the depth of market that you're used to seeing when you go onto, say, the exchange. I'm talking about the DOM or the DOME ladder. This is a ladder of price that shows you support and resistance. It shows you the argument between the buyers and the sellers. And so new traders go and spend days learning to read this, to understand what's actually happening between the bulls and the bears, and they trade based on that. Don't worry, I'm going to put some useful links in the description below. The videos that I'm going to put the links to are quite long, but they are real and they will teach you about real trading, and that's what this channel is all about. This brings me on to rule number 2, which is KISS, or keep it simple, stupid. I get amazed by how complicated people can make trading. Let me give you an example. So I come across a YouTube video and someone's talking about this amazing new tool on TradingView where you can select moving average crossovers and filter by Bollinger Band bullish signals and combine everything together in one data search that will tell you whether something is a strong buy or not. I'm thinking, okay, well, that's quite a clever tool, but how's it going to help me actually make money? Anyway, what surprised me was that this tool was actually free. And then I realized it was free because it doesn't help me make money. And then all of a sudden I realized, wow, they do a volume profile. Now, I'm a fan of volume profiles. For those of you who are used to reading volume against the time axis on a chart, you can look at volume as a volume profile against price to tell you exactly where the argument between the buyers and sellers are at specific price points, and that's going to give you a much stronger view on support and resistance anyway. So I'm looking for a volume profile, and I find out that, wow, now I need to pay $10 a month as a subscription just to see the volume profile. I mean, are you to tell me that the first tool that was so complicated is free, yet the one that just displays volume in the way I need it on a chart, I have to pay money for? I was like, come on, really? The point is that it was the volume profile that people need, and therefore TradingView is charging money for. So what bugs me is when I see loads of charts and Elliott wave theory and moving average crossovers and triangles colored in with all kinds of support and resistance and trend lines to try and predict price. Just stop and KISS. You don't need all of that to be profitable. In fact, trading doesn't have to be complicated. In this January lull alone, I made 15% just on the dip. I was just using smart ideas, and they're not complex at all. They require very little money management and very little knowledge around risk to reward, etc. Okay, so moving on from that, rule number 3 is that risk to reward ratios, money management, or even your ideas in trading are secondary to certainty. When you place a trade, place it with certainty because you have analysis behind it that tells you beyond reasonable doubt that you are going to make money by being in there. I'll give you an example. I was placing a trade yesterday with a 30% potential because it was arbitrage. I knew that the only risk was transferring a coin from one exchange to another. But I was developing a tool that was telling me there is a gap between one exchange and another. It was a no-brainer. Move the coin from this exchange to the one where I can sell it for more on the other exchange. Now, there's not a guarantee in any strategy, but it was obvious to me that because it was arbitrage, because the prices were there for the taking, if I could get in and get out and execute well, I would take essentially what felt like free money on the table. So trade with certainty. Okay, so let's pull all of this together. Now, if you're looking to trade over the long term, you're going to use a different type of strategy. If you want to day trade cryptos, then learn how to read the order book. If anybody out there is using a depth of market ladder and you know of one for cryptocurrencies, please tell me, because I've been searching for one. If anybody out there watching this video knows a developer or is a developer and would be keen to work with me to develop a depth of market ladder so that we can trade profitably in cryptocurrencies, please get in touch with me. I will put the Telegram link this time in this video below in the description. And until the next video, guys.